Good morning, guys. Again, for the audience, we're recording this a day late, largely because of my travel and Derek's prior engagements. So apologies for that. But it's going to be a really fun and interesting conversations. Of course, as we all have done in the past, we've had Greg as an analyst for Portal Asset Management dive deeper into some of the tokens, and we had Mark, who provides a commentary on overall his outlook and perspective on global macro and how it relates to the overall crypto markets. So without any further ado, Mark, welcome once again to Beyond Bitcoin. Love to hear your perspectives. And Greg, welcome again. This will be a super interesting conversation. With that, Mark, give us a quick perspective of how you see the markets evolving. And then we'll dive deeper into some of the other elements of global macro events like monetary policies, gold, overall volatility, rate cuts, and the whole gamut of things.
Thanks, Nitin. So, as much as it's always a fun conversation, it sometimes feels the markets are not that fun at the moment. Seeing a bit of a stall in ETF flows, and the altcoins have been hit pretty hard. Looking for a crypto-specific reason, I can't find one. I haven't seen any duress in the system. I haven't seen any sort of systematic risk across any of the exchanges or any of the big players out there. I think it is becoming a lot more tied to, as you said, the macro cycle, the US liquidity cycle. Inflation figures came in slightly higher than expected, and then this timeline for rate cuts gets pushed out a bit. I think it's just, you almost look at it and go, is this the result of a strong dollar? But that's ultimately bad for risk assets, of which crypto is very much in that bucket. I think the other thing that's starting to play up a bit is that I can see regulation in crypto becoming a partisan issue. We're in an election, call it a super cycle year, where we're going to see election across most major G7 economies, particularly the US is coming towards the end of the year. And I think that's part of the concern, which way is the ball going to drop. There's definitely pro-crypto candidates. I think it's really good because the more light that's shone on the subject, the better. So our view hasn't changed. I think that we're going to see ultimately QE is coming back. I think rates have to come down from where they are, because the inflation we're seeing it's not consumer-driven inflation. It's not sticky. It's more due to the fact that you have what I believe is a temporary housing type crisis. And then I think B, we've seen core inflation, particularly with regards to energy and food, come down as quick or faster than expected. So I believe the trend is going to continue for the remainder of the year, and that's very good for risk assets, particularly crypto. So hopefully the US they should have cut rates already, but hopefully they'll start cutting by the fourth quarter of this.
Yeah, on that, and this is a question for both you and Greg. A few things that as I've been analyzing, Mark, and we've had this conversation before in Beyond Bitcoin, is the overall liquidity availability and the risk on risk off equation that we discussed. So as you know, with QE and rate cuts, liquidity becomes a bit easier, and you begin to see some of that liquidity move into the crypto ecosystems. With what's happening around the world, for example, the Bank of Japan's recent decision to reduce government bond purchase, which is essentially indicating towards tightening of its policies. They haven't really talked about specific bond plans from central bank perspective. And then you begin to see rate cuts from ECB and Bank of Canada. While not substantial, it still influences the risk on, risk off narrative as you described, right? Second thing is, which was super interesting, is gold. During consensus, there was a Wall Street article on this, as I think yesterday or day before yesterday, where central banks worldwide expects to increase the gold reserves over the next few years. India purchased 270 trillion worth of gold. The World Gold Council reports the highlight that 80% of the overall reserve managers around the central banks have given a boost in global holding of bullion, which indicates that them questioning the strength of US dollar on the long run. So if you look at all these things, with rate cuts, maybe you'll get a temporary blip in the liquidity flowing into it. But I think the long term, which is essentially the alternative asset in crypto momentum, is that with overvalued equity prices and prompting investors to seek alternative asset classes, do you think that a combined effect of loosening liquidity a little bit and ability for them to be able to look into crypto as an alternative asset class, we'll begin to see a bump of the first rate cut into this ecosystem while crypto takes the center stage?
Do you want to comment
Do
first?
you want to comment first, Mark?
And
And then I'll go after.
It's a broad, so sorry, but
I think definitely. I think first of all, on that, so you've got they just had the recent meeting of the G7, right? In, I think it was Switzerland and then Italy. And then you get the speech that came out of China saying, look, the G7 is shrinking and already now the BRICS economies are taking over. So I do think there's a repositioning of global currencies. To me, it's kind of like, I don't want to say it's irrelevant, but there's a real asset. There's Bitcoin, which is not tangible, but it's a real asset. And then you've got different currencies in the price, which is a perception. So it's like, well, Bitcoin in dollars might do X, but Bitcoin in euros might do Y. Bitcoin in whatever BRICS currency is coming might do. So I think that the valuation, depending on where you sit as an investor, might look good or bad. But from a usability perspective or from the network effect, like I think we're ahead of where we should be tracking in terms of getting to that 1 billion users. If you look at the ETFs, this to me is kind of the telltale sign, because we look at on-chain data and we look at the ETF flows. There was always going to be that first wave where there was pent-up demand of investors who wanted to get in but couldn't get in for whatever regulatory reasons. But now you've got to take a view as well that some of the institutions, the big institutions, and we spoke last week, we had a call with some of the biggest Swiss private banks and others. They take a long time to onboard product. That doesn't happen in a week or two or a month. So they're still onboarding the product. So I think that's going to be the second waves, due to these big institutions having this long drawn out approval process. And then I think the third wave is that, well, you're getting more product, not just Bitcoin. It's going to be Ethereum. There's going to be Solana behind that. There's going to be a whole lot of different then indices. We've always said, it's part of a portfolio. It's an alternative asset. It's a hedge against what we believe is rising correlations and inflation. It's got all the benefits of digital gold, but also it's got this perpetual call option to the space that's just going to be generating so many new applications that are coming that we still haven't really thought about. And tokenization is just now starting to rear its head. That's one of them. So bluntly, I think, yes, this is very good for crypto, but it takes time to play out. Greg, if there's anything you maybe want to...
I think there's all very, very good points, Mark. I think also the market's now, viewing Bitcoin as potentially truly a sound currency, with so much potential weakness coming through in fiat currencies and, slowing economies as central banks having to start spending again. There's potentially a lot of weakness in fiat, and Bitcoin's sort of really, it's always had that potential to be sound currency, sound money. And I think that's starting to come through now. True. And I think you're right about the waves. I don't think we've estimated how big this second wave coming in ETFs is going to be. I think it's going to be so much bigger than the first wave. It's going to be longer and more sustained. It's going to drive much more liquidity into Bitcoin. And then I think you're right. You've got to think about Bitcoin is almost a separate asset class within crypto from everything else that's smart contract driven. Ethereum is a very, very different beast. We've talked about before about Bitcoin you can label as digital gold. And that's a really easy sell. But Ethereum is a much harder to define in terms of its elevator pitch. Is it programmable money? Is it the global app? Is it the global app store? How are these different sort of factors coming into play? And I think these S1 applications for the Ethereum ETF, I think they're coming through potentially early in July. We could see Ethereum ETFs listed a lot sooner than most people think. And then I think you'll see a lot of flow into ETH. Probably, I think the market's underestimating how much flow they will see. They're sort of talking about 10 to 20% of the Bitcoin flow that we've seen. I think we'll get more than that. So I think that'll really signal the start of alt season and signal to strength into the rest of the year. Looking forward to that very much.
Yeah, absolutely. And a few nuggets too, Greg, to your point. I think there was some rumor mill yesterday where Joe Lubin, who was, of course, sued for MetaMask being the broker-dealer because they're taking commissions and they're facilitating trades. And in that context, Joe Lubin actually wrote a letter to SEC, and apparently SEC responded they'll be closing any investigation. They'll not be going after the ETH 2.0 to be security, which opens up a lot of regulatory clarity around the asset class. But at the same time, I think to your point, Greg, 48 plus different layer 2s, 40 plus different DeFi projects popping up in Bitcoin. And the entire thesis of all my conversation that I've had in these developer conferences is to move this liquidity of this massive asset class, which stands on its own today with $1.3 trillion valuation, and ability for them to move from one ecosystem to another ecosystem. So I think you're absolutely right. I think when all these things come through, we see interest rates ease a little bit, liquidity ease a little bit. You see a massive flow of capital into the sound money. One thing I'm observing too, and love to again, Mark, get your perspective from global macro point of view, that upcoming decisions, UK, Australia, China, Indonesia, Switzerland, Norway, India, they all are in upcoming weeks are supposed to disclose their interest rate decisions. Well, this is like a global consortium of central banks trying to figure out as to how do they deal with economies and challenges that comes with it. Second thing is elections. 75% of the world population is going through elections at the moment. So every time you have an upheaval, you'll find crypto stand out to be an avenue where people look to it for some level of stability, I think. But I'll pause here and get your perspective, Mark, to see if you see it the same way.
In an election year, you generally want your constituents to be happy. You don't want people to be very. So I think that's part of the liquidity.
Just in the election year, though.
Just in the election.
Everything,
After
yeah,
that,
that's right.
the promises are shelved again, and we can go back to. But I think that's part of my kind of like, well, like there's no reason for rates to be this high. I don't think consumers are in great shape globally. I think people are. When I look at the jobs data, it's been a bit manipulated in terms of people working 2 jobs or temporary jobs. It's not the same as a very healthy growth in economy. And I think that's another topic for discussion, but it's partly, we've spoken about that Amazonification of cost curves. It's partly now what AI combining with other aspects of whether it's robotics and others, Internet of Things, that's all kind of having people's ability, wage negotiating power lower and lower. So I think that's part of it. What I do think though is there's the people we say are running things, but then the real people running things, which is kind of like, take a look at who the biggest shareholders in the world, like BlackRock, Vanguard, these institutions hold a lot of power, a lot of lobbying.
True.
So it makes me very optimistic when I see, BlackRock, first of all, pushing ETFs, but now BlackRock's launched their first on-chain fund that, I don't know the exact word.
Biddle.
It's it's the BlackRock USD Institutional Digital Liquidity Fund. And it's represented, as Greg was talking about, on Ethereum. It's backed by US treasuries. It's a simple product. I mean, it just offers a stable, $1 token, and it pays the interest across directly to your wallet. But what it started to do, it's a small amount so far. I think it's like 300 million that they've attracted. But think about what that opens up in terms of 24/7 liquidity, in terms of institutional access to the market, in terms of tokenization. First of all, you've got treasuries. Then think about the corporate bond market. Think about the junk bond market. Think about the real estate market. So, if BlackRock and Vanguard and others are sort of like legitimizing the space, then it's going to be like, well, is the tail wagging the dog? Because I think politicians are going to be very reticent to go against that after all this money and all this time and effort and building out of teams and say, actually, no, you can't do this anymore. It tends to be that these big financial institutions will, I think if anything, you're going to see a lot more applications, and I think they're going to get a lot smarter, because up until now, crypto seems, one of the things I had to get used to about crypto was that it kind of existed in this world of its own. DeFi it didn't really have massive jump across into what we call traditional finance. This was over the past few years. But like in the last year to 2 years, last year and a half particularly, from the middle of, call it the end of 22 going into 23, you're seeing a lot of crossover. You're seeing a lot of ecosystems that are being built for real world assets. And I don't think many people understand it, and many people are ready for it. And most institutions, family offices included, are not positioned for that. They haven't got product, they haven't got an understanding of the product or the plumbing behind it. And I think that's where our opportunity lies, because this next wave, I think, is going to take us way beyond, is Bitcoin stopping at 70, 80, 90? Like, I think those numbers are going to look back and be like, we could have gotten Amazon like in 2001. We could have bought it.
Or NVIDIA. Or
Tesla.
NVIDIA 3 years back.
Yeah, exactly.
Yeah,
Greg,
I think
your thoughts?
The one thing that I'm sort of most interested in this is you speak to a lot of investors and they understand the power of blockchain. And I think that's exactly what Mark's talking about is blockchain appears to be the most efficient way of storing information on a database. It makes perfect sense to be used within a real world asset environment. But then I think a lot of people then think of crypto as something separate to that and something volatile and risky and meme coins and altcoins and shit coins and all these different names that we give them, when in reality, blockchain doesn't work that crypto. Cryptocurrencies are used to validate the network, to make sure that everything's protected and in place and done correctly, and to ensure that actors behave in the right way. So I think there's this general misconception about blockchain. People understand blockchain, they understand what the benefits are, but they can't bring that back into understanding how the cryptocurrency works within that. And I think that's a really critical point going forward for people that want to invest in the space, to understand how the cryptocurrency markets work. They are a very different beast to try and understand and analyze and to value. That the target market is huge for the technology. So trying to put price targets on these things and limit the upside, I think is the wrong game. I think you should be looking at it much more holistically. So That's my 2 sats worth into the discussion, to just let this real world asset process take over. It's starting very slowly, but it's going to gain a huge amount of momentum very soon, within the next 2 to 3 years, I would say.
Which was funny, Greg. You said 2 sats. I usually say 2
No, 2
BTCs.
sats.
And of course, that big difference between the two. So you're the only person I see is hearing about 2 sats. But let me ask you the question, right? Which I've been pondering over this for the longest time, from a perspective of the, trading versus investing, right? And this is true for even during the high vol when these traders they sell on volatility versus long-term investments, which is going after the long-term element. And this is a perfect example with NVIDIA. People who would have made investment in NVIDIA would have gotten 3-figure multiples from 2015 onwards to today, right? And that's an investment strategy when they're not looking into going after the trading on vol. From a crypto point of view, right? We haven't seen that yet. We haven't seen, Mark, to your point, the tail wag the dog. It's still being a lion's share of the underlying, like especially Bitcoin and ETH, as the structural assets. We haven't seen the options market. We haven't really seen the trades happening, which basically overtakes the underlying asset by itself, which has happened in markets. So I'd love to get your undertaking on that piece, because I was listening to this Big Takes yesterday. It's a Bloomberg sort of podcast to listen to in effort to understand the markets better. You find this price swings, which we've seen the last 2 days. Of course, you begin to now see all coins, the Doge and Solana, all kinds of narratives that float around it. But there's an underlying theme of a narrative, which NVIDIA set forth with AI, and that led to the entire AI industry sort of blooming, from my perspective. Do you see anything of that nature which is foundational to crypto? To Greg's point, blockchain is essential. People understand the value of blockchain. People begin to now look into, and everything else is secondary afterwards, to say we believe this will change the world as we see it. RWA movement is kicking off, which again is piggybacking on the same narrative that crypto has been enjoying from last 12 plus 14 plus years. I just want to pause there and get your perspective, Mark. Is there an underlying narrative that you see beyond the fact that it's just sound money, which is an old narrative? Anything that you see that could have the same impact NVIDIA has had on the entire AI space?
See, look, I mean, if you're asking me, so just talk about it from a general point of view first. There's this drive globally to get rid of cash for illicit activities. That's a big concern around. As you've seen, compliance is growing. Like over the past decade, it's become one of the biggest parts of the financial services industry, KYC, AML. The next step, which I believe, and I agree with, I saw an interview recently with Larry Fink talking about the next tokenization of all financial assets. That means you have the ability to track and trace everything. But number two, think about it. If every single, whether it's stocks, real estates, alternative assets, etc., has its own identification, it's already got its own QSIP in some ways, but at this point in time, it has its own way of tracking all the way through the ledger, then I think it starts creating an environment where, individuals will understand it, because right now a lot of individuals are looking at it and going like, why do I buy Solana? And then they'll try and research a bit on Solana and understand, well, how much trading do they have to do? How does the business model work? To Greg's point earlier, like Bitcoin versus Ethereum. Then look at some of the other tokens, the fetches and some of the AI-based tokens. Definitely a story there, but it takes a long time to understand that. Whereas for most investors, you can buy this, go through this account and buy your equity via this broker and get the script, or you can go on, do it with, bypassing all of that and buying it directly, whether it's via a DEX or, and you can get these tokenized assets. I just think that's going to be like bringing in a lot of capital, as well as when you take a view on how much, some of the most profitable activities, whether it's in fund management, others, script lending, margin, all that sort of thing. To go back to your discussion around volatility, it's only when you have a broad spectrum of investors, where you have short-term traders and speculators, and then you have medium-term hedgers. Some of the biggest participants in the options market are farmers. They have to hedge their crops. They need to work out, and then production companies, where they're using oil, airlines. So there's like all these different market participants with different investment objectives and expectations and outcomes that they're looking for. And that brings a nice level of liquidity and stability to a market. Whereas I think in the crypto space, part of what we've lacked is that long-term investor. We call them, the guys that hodl and diamond hands and all that, but it's not the same thing as someone who's accumulating every month based on inflows, like a pension fund or an insurance company or a family office or a company that's going to say, look, we've got a lot of our cash in treasuries, or a bank that there's certain tier 1 and tier 2 and tier 3 cap ratio. why don't we shift a bit of this into crypto? It's a long-term holding. If anything, it'll only accumulate every year and mark to market every year. Unfortunately, the volatility will also then come down. And people don't really get the fact that with volatility, there's also opportunity. In this space, the volatility over time has tended to be on the upside rather than the down. Even though there's sharp periods down, long-term, the Sortina tells you that the volatility is to the upside.
No, it's fantastic. Greg, any thoughts on that? I think it's a very long and deeper conversation, but I just want to throw it out there as a form of summation for our audience to understand that we're looking at this from multi-vector analysis and not just a simple which token is going to go up thinking.
Yeah, I agree
from that
entirely.
point.
But one thing I wanted to point out is we haven't yet seen Bitcoin futures traded on the New York Stock Exchange. You wait to see them trading on the NYSE, and you start seeing some of these large investment banks creating 10% per annum return products that are basically driven by Bitcoin's underlying volatility. And they'll create an income product out of Bitcoin's implied volatility or underlying volatility using the options market.
Interesting.
That'll get bigger. It won't get bigger than the Bitcoin market, but it'll be substantial, and it'll be substantially large. So that's really going to be another driving force again, another tailwind that we just haven't seen yet. It's there, but it's coming, and it's coming at the same time that that second wave of ETF buying is coming too. So still very, very bullish on the outlook for the end of the year and next year.
So if not NYSE, Greg,
Correct,
it could be
correct.
TXSE. BlackRock and Citadel have invested into opening another stock exchange in Texas. Texas is friendly from a business tax perspective. I'm fortunate to be a resident of Texas, so I'm really excited for that entire industry to move, a part of that to move to Texas. One last question before we wrap. I know this has been a super interesting conversation. Is to your point, Mark, on RWA or real world assets. There's been a massive momentum in every crypto conference now, including Bitcoin conferences, when they have a sort of a vertical for institutional investing, which was historically never done. But the past two Bitcoin conferences, both in Asia and the United States, there's been a separate section purely for institutional element. And you mentioned BlackRock's BUIDL. Crypto markets generally have evolved over time natively, and they have their own market infrastructure that deals with the inception of tokens and how tokens get listed and what's the pricing from various market data providers. And the DeFi protocols then become market utilities and instruments and new products. So it has a different sort of wavelength of how things move in that world, both in terms of velocity, but also in terms of valuation. Whereas the traditional markets have a very complex and decentralized, which leads to the challenges we have now in terms of the time it takes to settle a trade and the various market utilities involved and market infrastructure participants involved, which provides the complexity in the fee structure that it stands today, which is what crypto is trying to disrupt. So when you tokenize these assets, the BUIDL as an example that you gave, Mark, I would think, and this is something which I've been pondering for a long time too, because my pedigree comes in working with traditional finance and technology from IBM perspective, is at what point do they converge? Because they're working on two different sort of wavelengths, that you still need to have these same market participants and market utilities because they uphold the legal regulatory requirements of pricing and reducing counterparty risks, whether you have custodians or you have clearing corporations and you have broker-dealers. All these make up the market infrastructure. So even when you tokenize things, you still need that market interest in that market participants and market structure. And I'm just wondering, do you see that by tokenizing something, or you compress these different players and remove all the inefficiencies, or do you still see the same market participants exist? We simply increase the velocity of asset movement. Question to ask, but just want to get your thoughts.
Interesting, because when I started off, this is quite funny. When I started my career in 1999, in 1998, 99, the bank that I was working for, we were dematerializing script. So we used to go into vaults in Johannesburg, in Parktown, and bring out bonds and share certificates. And there were all these guys on little motorbikes. You know, if you bought or sold shares, they'd be driving around. So it was like, I went through that process, going from script to what they called straight through processing, where it became T+3 settlement and so on. And I think, you know, they had to build the infrastructure for that, and they had to build the collateralization for that, because now it sits in one node. It's not people holdings, and there's a central register, the JSE at the time. So I think it's kind of the same thing in that we're going to see many iterations of when we started this fund. When we look back, you know, it was like Gemini was in the running, Fireblocks tried, and the exchanges were, you know, there wasn't any clear winners. So I don't think there's going to be a clear sort of winner takes all. I think there's going to be the same as it's been with custodians and others. it's going to have consolidation. Like you see in every industry, there's proliferation and then there's consolidation. I think what's different is who's going to be funding it. So you need to mitigate risk of default and these things, you need collateralization. And only the big institutions have the balance sheets to collateralize some of these custodians and things like that. So I think we already have the infrastructure in place. And I think there's just going to be a bridge to this new asset class being acceptable, where the front office guys might want to understand what Solana is, but they don't really care how it's going to be traded and settled in custody. That's not really what they're paid to do. The only other thing I can say is that Web3 changes the dynamic, because whilst this was all unfolding in the late 90s, it was like the internet was just kind of really becoming, something that was user friendly. We were still putting in a lot of infrastructure. So it's kind of like the two ran hand in hand. And it's the same thing now. We've had this massive investment in infrastructure in the space. Like there's been huge amounts of money put into the various chains and the exchanges. And like we're starting to see something resembling, like not even resembling, we are seeing real businesses, real exchanges. I mean, look at what Binance, Kraken and the rest are generating and what ETH's generating. So I'm very confident that unless some of these institutions really don't want to adapt, which I don't think people have gotten used to that. I think everybody realized once smartphone came out, how many businesses were made redundant, right?
True.
I think realized this adaptation with as going to speed up. If anything, the world's going to get faster and faster. And I think this is a way to deal with that from a ledger perspective. I don't know, Greg, if that makes sense, because I kind of went on a few different
it resonated with me, Mark. I'd love to get your thoughts as well.
I think just from an Australian perspective, look at the struggles that the Australian Securities Exchange has had introducing blockchain into their settlement process. There's so much resistance from the incumbents. That doesn't mean it won't happen, but they're basically putting them all out of business because it's atomic and it's on-chain, and it's pretty simple. It puts all of the settlement, custodian, all of these guys out of business. So I don't think they can adapt. I'm not even sure what they can adapt to. So it's pretty revolutionary in the technology that it brings. I think the key for me will be when banks in the US can custody cryptocurrency effectively and cheaply, because at the moment that's an issue for them. Until that's resolved, I don't see this being resolved. The banks will be the driver once they can custody and start making money off it.
I 100% agree. Coming from a biggest custodian in the world, I went through this, grade my hair in those conversations. But on that note, thank you so much, gentlemen. Mark, CIO of Portal Asset Management, Greg, Senior Analyst, Portal Asset Management, who I have the privilege of working with on a regular basis. This was a really rich conversation. We could speak for hours. Maybe we use another Beyond Bitcoin session to expand on RWA and what it means for traditional finance. Thank you, gentlemen. It was great chatting, and bye for now.
Thanks, Witten. Thanks, Greg. Appreciate it.